welcome. You're watching Market Cafe on ET Now with me, Snehi Shah, and with me is Ankita Saxena. Now, this is a show where we take you through all the top global stories that you should have on your radar, all the stocks that you should be keeping on your radar for the day, among other things, and we prepare you for the trading day that is lined up for you ahead. But before we start the show, we've got a big update coming in from the US Fed. They have gone ahead and hiked the policy rates by 25 basis points. Now, this was largely penciled in and this was largely expected to happen. So, Ankita, tell us how the US markets have reacted to this and what impact does this have on the market?
That's correct, Snehi. It is something that the market was already expecting and not a very unexpected reaction coming in from the market there. But it was the commentary that really mattered and we will take you through that in details. But for now, the Federal Reserve approved a much anticipated interest rate hike of 25 basis points. That takes the benchmark borrowing costs to their highest level in more than 22 years. And the quarter percentage point increase will bring the Fed's fund rates to a target range of 5.25 to 5.5%. And the Dow rose for a 13th straight day, matching its longest winning streak since 1987. Now, if it closes again higher today, it would be a streak not seen since 1897. That was about a year after the benchmark was actually created. So that's an interesting fact there. Now, during this latest run, the Dow has been outperforming and gaining approximately 5%. However, we did see, S&P 500 and Nasdaq Composite lagging behind the Dow index. However, there was a marginal downtick that came in yesterday for S&P 500 and Nasdaq, that ended the day lower in the red with nominal cuts. Let's go across to the European markets. European markets, however, closed lower, even though the interest rate hike was largely penciled in. But remember, today we have the ECB meet and they will be coming out with their rate hike. So the market is really poised now and waiting and watching out for that. The benchmark stock 600 index closed down 0.6% with most sectors in the negative territory. The CSE fell 1.4% as the luxury goods behemoth LVMH or Louis Vuitton dropped over 5% after reporting a surprise slowdown in the US sales. DAX was down 0.4% and FTSE 0.1%. And of course, we have the ECB rate decision that is due as of today, Snehi.
All right, so lots of cues to watch out for when it comes to the global handover. Let's look at what oil also did. And oil prices fell about 1% on Wednesday after data showed US crude inventories fell lesser than expected and the Federal Reserve raised interest rates by 0.25 percentage point. Now, WTI crude oil inched up 0.5% and closed at around $79.3 per barrel level, and Brent crude also inched up 0.4% very nominally, closing at around that $83.2 levels. Now, both benchmarks fell more than $1 earlier in the session after hitting 3-month highs on Tuesday. So, a fall coming in, but recovery seen on the oil front, and higher interest rate increased borrowing costs for businesses and consumers. Remember that. So, this could slow economic growth and reduce oil demand subsequently. So, keep an eye out on where oil is headed. Took a sharp cut, but saw recoveries nonetheless, Ankita.
That's correct, Snehi. But let's quickly move on to the events that we will be tracking very closely today. So all eyes will be on the monthly expiry. Today's Thursday and the monthly expiry as well. Also in the global cues, we have the US GDP number that will be coming out. And of course, as I mentioned, the ECB rate decision that will be out today. Back home in the corporate action, we have MOFSL that will be considering internal restructuring and JK Lakshmi Cement that will be considering a proposal for fundraising. And in the primary market has been really hot, up and running. We have NetWeb Technologies that will be listing on the bourses as of today. And we have Yatharth Hospital. It's going to be the second day of subscription. And tomorrow, of course, is the last day for subscription for Yatharth Hospital IPO.
All right, and let's look at some top global stories that we're tracking this morning for you. And the biggest cue that the markets will be eyeing this morning is the 25 basis point rate hike from the Federal Reserve. Now, this was the 11th rate hike in its last 12 meetings, taking the benchmark interest rate to the 5.25 to 5.55% band. In his speech, Fed Chairman Jerome Powell hinted at another rate hike in the upcoming September meeting amid the central bank's battle against inflation. On that note, let's hear it out from the word out from the man himself, Fed Chair Jerome Powell.
Haven't made a decision to go to every other meeting. It's not something we've looked at. We're going to be going meeting by meeting, and as we go into each meeting, we're going to be asking ourselves the same question. So we haven't made any decisions about any future meetings, including the pace at which we'd consider hiking. But we're going to be assessing the need for further tightening that may be appropriate. You read the language, to return inflation to 2% over time. We hope that inflation will follow a lower path but it will be consistent with the CPI reading, but we don't know that, and we're just going to need to see more data. So what are we going to be looking at? Really, it will be the whole broader picture, and starting with we're looking for moderate growth, right? We're looking for supply and demand through the economy coming into better balance. I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted.
All right, that was Jerome Powell on one more interest rate hike that is expected probably in the month of September. Shifting focus to some global earnings, then Meta reported its second quarter earnings with a beat on the top and the bottom line, setting the stock soaring as much as 6% in after-hours trading. CEO Mark Zuckerberg said they continue to see strong engagement across their apps, and they have a broad roadmap ahead with the new AI products in the pipeline and the launch of Quest 3, which is a virtual headset that will be releasing this fall.
Let's keep it with global earnings then, and European aircraft maker Airbus posted better than expected underlying operating profit for the second quarter. The plane maker's adjusted earnings before interest and tax rose 34%, while revenues were up 24%, buoyed by higher jet deliveries.
And global retail giant Amazon is cutting some jobs at its fresh grocery stores. The company said it is restructuring in-store staffing and operations model at Amazon Fresh stores in the US. By means of this effort, the company will begin by eliminating its zone lead role. In its statement, the company said that the employees affected by the layoffs can look for new roles within the company or accept a severance payment.
Let's shift focus to some global politics then, and Canadian Prime Minister Justin Trudeau has made a major overhaul to his cabinet ahead of the next elections in the country. This is the first ministerial shake-up since his re-election with a minority government in 2021, and post the rejig of the 38 cabinet members sworn in, only 8 remain in their previous roles.
And Samsung has unveiled its most premium phones till date. Now, the tech giant has launched its latest foldable phones alongside new watches and tablets. The Galaxy Z Fold S boasts of dynamic AMOLED 2x in display screen and far superior camera quality. Let's take it across to Samir Dikshit for more details on this.
So let's start with the Samsung Galaxy Z Flip 5, the fifth version of Flip series, and here's the first look. And if you see, it has got a new color, but the biggest attraction of the fifth version is the front display. If you see, the front display is of 3.4 inch, whereas the earlier version had just 1.9 inch display. So to give you a sort of a comparison, let me show you. So this is the earlier version of Flip series, and here is the latest version, fifth series. So this has just 1.9 inch display, this one, whereas it has got a 3.4 inch display. A wider screen display in the sense that you can do multiple tasks without opening or flipping the phone. Now, the multiple tasks include that you can swipe down, you can see, you can access the settings option, you can increase the brightness, put your phone on silent mode, multiple tasks in terms of setting that you can do. You can swipe left, and then you can see these weather notification, and these sort of notifications could be easily accessed. If you swipe right side, then all the notifications, the messages that you get, that could be easily accessed. And when you swipe up, so Samsung Galaxy Pass, or if you are having a credit card and that you have stored, and then you can make payment. So these sort of functions could be easily accessed with this large screen size. Not just this, if you want to customize, you can put a camera button over here, and by just dragging this camera button, you see, you can switch on the camera and you can click a selfie.
All right, let's shift focus from tech to ed-tech then, and Peak 15 says it will be significantly writing down its investment in Byju's. It has written a letter to its limited partners while adding that it's a developing situation. Anurag Joshi, my colleague, is on the phone line for more details on this. Anurag?
Yes. So Peak 15 has written a letter to its limited partners. And these limited partners are the sponsors of its investment funds, and these funds are investing into various companies, including Byju's. So the key takeaways from the letter are that Peak 15 says that it is going to mark down its investment valuation for Byju. And the rationale for this is that it's basically, it says that the marking down exercise will show a lack of visibility into Byju's financials. Now, Byju's has delayed the FY22 results, but it has promised that it will release them by the end of September. And also, Peak 15 says that it is reflecting the inability on its part to influence any corrective actions from Byju's on release of the early financials. And now this letter comes on the heels of Prosus, which is a significant investor in Byju's, detailing the reasons why it left Byju's board last month. Now, last month, Prosus, Peak 15 and Chan Zuckerberg Initiative directors quit Byju's board. And one of the key reasons which sources had told us is that the delay in the financials release. Now, Peak 15 says that it will significantly be writing down the investment in Byju's, and this is going to happen in the upcoming reporting cycles. Now, the reason why Peak 15 and Prosus are doing this is still not known, but one reason possibly could be that the investors, Byju's investors, are becoming more restive, and there may be effort on their part to probably distance themselves from the company and try to show, more proactive action on their part, given the fact that there's an increased regulatory oversight and there's more glare from the government on the company.
Well, moving on then, the GST Council is expected to meet on August 2nd to discuss the framework for 28% GST on online gaming. My colleague Prakash Priyadarshi filed this report earlier. Let's take a look.
The GST Council is going to hold an important meeting on August 2nd, wherein the issue, which is with regard to calculation of 28% GST on full face value in the context of online gaming, will be discussed. Sources are informing that the meeting will take place through video conferencing, where clarity would be sought from the GST Council when it comes to calculation of 28% GST on full face value. As you are aware that in the last meeting, GST Council has decided to levy uniform 28% GST on full face value in the context of online gaming, but it has not given clarity as to how full face value would be determined, whether it will be on entry level or will be based on every bet. That is something where the clarity is needed, and it is causing confusion among the industry and the government as well. Also, Finance Ministry has received some representation from the industry player, wherein it has been demanded to give clarity when it comes to determination of face value, whether it will be on entry level or on every bet. That is something which is going to be discussed in the next meeting. But one thing is pretty clear, that there is no rethinking on 28% GST on full face value. This is the council decision which would be there. But yes, the council will decide the framework as to how full face value would be determined.
All right, thanks Prakash for all those details. Let's move on then. And the world's largest rice exporter, which is India, banned exports of non-basmati white rice to rein in the domestic prices and ensure adequate availability of non-basmati white rice almost a week ago. Now, this type of rice constitutes about 25% of the total rice exported from the country. The grain is a staple for almost half of the world's population, with Asia using roughly 90% of the worldwide supply, with India supplying rice to more than 100 countries. The effects are palpable already, with the news of panic buying coming from several cities in the US and Canada. Even the IMF has said it would encourage India to remove restrictions on export of a certain category of rice, which, it said, would have an impact on global inflation. Back home, the move is also affecting several distilleries. ET now has learned from sources that soon a group of secretaries will meet and decide on alternatives for supply of food grains to distilleries. We spoke with Siraj Hussain, who is the former Secretary of Ministry of Agriculture, and Ajay Veer Jhakar, Bharat Krishak of Bharat Krishak Samaj. Let's listen in.
So what happens in a market is a ban where you disrupt 5% of the supplies, even if the supplies could be disrupted because of production shortfall, or supplies could be disrupted because of the Ukraine war, because of the Black Sea grain deals is not being allowed to go through repeated, or Indian export bans. That's when speculators jump in and make a lot of money. And I think this should clearly be noted. So if this decision had been taken and world was prepared for this spike in prices would not have come that we have seen in the last 10 days.
Imposing a ban of this kind, they would have taken into account the likelihood of monsoon, the stocks available with Food Corporation of India, the inflation in other commodities, because sometimes there is high inflation in other commodity, and in sympathy of that, inflation takes place in case of the other commodity also. So all these factors would have been taken into consideration. You see, according to the roadmap prepared by the Niti Aayog for ethanol, 55% of ethanol was to come from sugarcane, which is on track, which is not a bad policy, which is a good policy. Therefore, all these private sector distilleries which have been set up, in my view, have taken a risk, because they would have also known, they should have known that Indian surpluses of food are very small.
And well, moving on then, PM Narendra Modi inaugurated the International Exhibition cum Convention Centre Complex and unveiled its new name, Bharat Mandapam, in Pragati Maidan, which will host the G20 event in Delhi. In his inaugural speech, indicated that in his third term, India will be among the top 3 economies in the world. Let's listen in to what he had to say.
मैं देशवासियों को ये भी विश्वास दिलाऊंगा कि 2024 के बाद हमारे तीसरे टर्म में देश की विकास यात्रा और तेजी से बढ़ेगी। और मेरे तीसरे कार्यकाल में आप अपने सपने अपनी आंखों के सामने पूरे होते देखेंगे।
All right, that's the word coming in from the Prime Minister himself. But with that, we'll slip into a short break. Don't go anywhere. We'll come back with what the Asian markets are doing on the other side. Good morning and welcome back to Market Cafe. Thanks for staying tuned. As promised, let's quickly take you across what the Asian markets are doing this morning. And the Asian indices look largely in the green, faring very well after that Fed hike coming in from the USA. So let's quickly take a look at what Asian markets are doing. You've got Hang Seng on your screen, up almost 0.9%. Strong gains coming in for the Hang Seng, up 175 points. So that's faring very well. Followed by that, you've got Kospi. Kospi is also up 0.7%. Seeing some nominal gains coming there for the Kospi as well. Followed by that, you've got Shanghai. Shanghai is not doing much, rather flat, but trading with a positive bias of almost 0.2%. And then you've also got the ASX 200, which is Australia's index, and that's also up 0.7% in trade, 57 points trading higher. So green all across the Asian market, and seems like the US Fed hike is implying very well for the Asian market, Angita.
That's correct, Sneha. It is something that was penciled in. So we do see a sea of green in the Asian markets, and so is the GIFT Nifty. GIFT Nifty is up 42 points. And the US futures are also in the green, except for Dow, that is absolutely flat. So we could expect a positive start for the Indian markets as well.
Hi there, welcome back. You're watching Market Cafe on ET now. Let's look at some of the earnings that were reported yesterday, and let's start with Axis Bank. Now, Axis Bank saw a jump of 40% in in its net income for Q1. Its results coming in largely with what the street was estimating. Let me take you through the earnings fine print then, and profit after tax came in at 5,797 crore rupees versus 4,125 rupees. This was on a year-on-year basis. It was up 40.5%. Followed by that, you had the net interest income that came in at 11,959 crores compared to the 9,385 crores on a year-on-year basis, saw an uptick of 27.4%, so an uptick coming in on both of those fronts. Gross net performing assets, that's a GNPA, at 18,158 crores versus 18,604 crores on a quarter-on-quarter basis, so a slight downtick there, so that's a positive coming in for the company. But on the other hand, you had the net NPAs, that's the NNPA, at 3,703 crore versus the 3,559 crore that just came in the previous quarter, so a slight uptick coming in on that front. Followed by that, you've got the PPOP, which is the pre-provision operating profit that came in at 8,814 crore rupees versus 5,887 crore rupees, up 49.7%, almost up 50% on a year-on-year basis. Provisions, on the other hand, is a point of concern as it has come at 1,035 crores versus the 359 crores on a YOY basis. So that's a little bit of a point of concern for the company. And the company's also reported net interest margin, which is the NIMS, at 4.1%. Largely, you've got your PAT, NII and asset quality all in line with street estimates. So this is what Axis Bank's Q1 numbers look like.
All right, then moving on to another company that reported its quarter number, that was Tata Consumers, that reported an inline set of numbers, and with that the street was estimating, and the revenue was up 12.45%. The net income too jumped almost 30% on a year-on-year basis. Beverage arm Nourishco also saw strong growth despite unfavorable weather, whereas the Starbucks business managed to add 16 more stores in the previous quarter. Now, the EBIT staying positive for the coffee maker. Now, let's look at a note that came in by Morgan Stanley on Tata Consumers on the back of the inline set of numbers that they posted. They maintain an overweight with a target price of 863 rupees per share. Now, they feel that Q1 was broadly in line, but there was a slight beat on the margin front, and they see a strong growth trend in the salt and the sampan space, and they also see a slight market share loss in the tea segment, and they also see the distribution and innovation focus that is continuing in the Tata Consumer counter, and on the back of that they have maintained an overweight, and the target price is 863 rupees per share on the back of that.
All right, let's move on then, and let's also look at Dr. Reddy's. Now, Dr. Reddy's Laboratory saw a jump in its net income and revenue, beating analyst estimates on all accounts, and their US generic business too grew 26% sequentially. So here's an excerpt of a conversation we had with the management of Dr. Reddy's. Listen in.
There is an improvement. There is certain moderation in the price erosion. The model is the same. Price erosion is still there, but relatively to the past, it's much more moderate than it used to be.
Okay, so there has been an improvement, but Mr. Israeli, what we understand that in the US markets, what's also working is that the drug shortages are at a record high level. So how much of the price erosion are we seeing in the US generic business given the shortages across the dosage form, and what's the outlook going ahead on that front as well?
Indeed, there is a 15 to 20% of the SKU, I'm talking numbers of SKU, is in certain, let's so-called supply challenges, not necessarily a shortage. And this is a very important task for all of us to try to address it.
All right, moving on then, the pharmaceutical company Cipla, like we mentioned, reported a strong Q1 with net income coming in at almost 1,000 crores. Revenue too jumped at 6,000 crore rupees, and Cipla India and North America region sales came in at 2,000 crore rupees and $200 million respectively. Let's go across and listen in to what the management had to say.
Generally, the signs we are getting from the market is that because of the shortages and because of a large section of the market finding new homes. For example, a lot of US companies have been on sale or have gone bankrupt. I think the supply-demand side of the equation is readjusting or rebalancing. as a result of which the pricing pressure has moderated a bit. Going forward, I think, over the real impact of this moderation will probably be felt more in the next 6 to 9 months. At our current facility, which is Indore, we will launch and, within a week of when we are cleared. If we are not cleared to launch from Indore, then the process where our facility is getting ready, the batches get transferred, this launch is definitely out by about a year. Right. But having said that, we've already started working towards it, and some portion of that year has gone as we speak. So it will probably be a year out if Indore is not cleared. If Indore is cleared, it will be an almost immediate launch.
All right, that's the word coming in from the management of Cipla, but yet another company reported its Q1 earnings yesterday, and that was Tech Mahindra. Now, largely the Q1 snapshot missed the already muted expectations. It was a very weak show on the top line and the margins. Now, the management said that Q1 has been challenging and deal wins have slipped materially. Comviva's seasonality has led to muted performance, and headcount has dropped by 2.5% on a quarter-on-quarter basis. IT service growth has also been weak, and it is down 5% on a quarter-on-quarter basis. Let's look at the earnings fine print then. Profit after tax has come in at 704 crores versus 1,148 crores on a QOQ basis. So that's a sequential number coming there. Revenue has come in at 13,158 crore versus 12,708 crore, so a slight uptick coming in on the revenue front. Although on the other hand, you've got the EBIT margin that's come in at 6.8% versus 11.2%, so a major slip coming in on the EBIT margin front. On the other hand, you've also got CME that witnessed a significant decline of 9.4% on a quarter-on-quarter basis. Retail and technology was flat on a quarter-on-quarter basis. On the other hand, you had manufacturing that was up 1.8%. Now, employees declined for third consecutive quarter. And let's also look at what the brokerages have been penciling in on Tech Mahindra after it shared its Q1 numbers. Let's begin with Nomura then. And Nomura has maintained a buy with a target of 1,316 on the stock. They say that Q1 has been a big miss and is likely at the bottom of the earnings. So they see a little bit of improvement coming there. And recovery in telecom vertical, they say, will be gradual. They say that the second half of FY24 is likely to see much better growth. Followed by that, you've also got Morgan Stanley. Morgan Stanley has rated the stock with an equal weight rating with a target coming in at 1,060 rupees. So on a large front, largely you've got a margin miss, provisioning, salary hikes and revenue decline coming in for Tech Mahindra. And task has been cut for the upcoming CEO, the incoming CEO, the new person who's coming in, and they also see the room for improvement. Targets for FY24-25 EPS have been revised by 3 to 10%, and Nomura is also maintaining a buy stance on high dividend yield and valuations for Tech Mahindra.
All right, then moving on to another news that's coming in, and that is that Jio Financial Services and BlackRock have joined hands to form Jio BlackRock. Now, this company will be a 50-50 joint venture, and they will enter the India's asset management industry very soon. Now, the joint venture will launch operations only post the receipt of regulatory and statutory approvals. The company will have its own management, and as of now, initially, they're targeting an initial investment of approximately $150 million each in the joint venture.
All right, with that, let's quickly slip into a very short break, but don't go anywhere because as we return, we will tell you about all the stocks that you should be keeping on your radar this morning.
Welcome back here watching Market Cafe, and it is that time of the show where we tell you what are the stocks that you need to keep on your radar. And for that, I have my colleague Lisa in the studio with us. Hi Lisa, good morning.
Good morning.
Lisa, tell us what are the stocks that we need to keep on our radar for today's trading session?
Well, it's a mix of earnings as well as other corporate announcements. So let's start with the earnings first, starting with FMCG major Colgate. They have reported a good set of numbers. The revenue that came in at around 10.5% on year-on-year basis, and the PAT that was up at around 31% stood at 274 crore. Even the margin saw a good expansion, and it was at 31% versus 27% seen in the last year. Moving on to state-owned company REC Limited, even they announced their earnings. The interest income that was up 14% and stood at 10,689 crore, while the PAT that was up 21% on year-on-year basis. Jindal Stainless Steel, the leading steel player, even they reported their earnings, and the PAT that came in around 49%. It saw 49% growth, while the revenue that was up 25% on year-on-year basis. Moving on to other corporate announcements, Marico, they have announced that they have signed a definitive agreement, and this is to buy Satya Nutraceuticals Private Limited for a 58% stake, and it is and that will be at a cash consideration of around 370 crore. And as part of the transaction, the company announced that it has already acquired a 32.75% stake in the company. Moving on to Reliance Industry, Geo Financials as well as BlackRock, they will be forming a joint venture which will be a 50-50% stake, and it will be named Geo BlackRock, and the joint venture is aiming to revolutionize the asset management industry in India, and that will be through digital first approach. Moving on to Poonawalla Fincorp, the company has announced that it has completed the sale and of the controlling stake in its housing subsidiary, that is Poonawalla Housing Finance, and with this it has been sold to Perseus SG Private Limited, and with this stake sale, Poonawalla Housing Finance, they will cease to be a subsidiary of Poonawalla Fincorp. So that's all that will be on investors' radar for today.
All right, Lisa, thanks for that roundup. We will be keeping all these stocks on our radar this morning. But the government has proposed to sell about 5.36% stake in Rail Vikas Nigam or RVNL through an offer for sale on the 27th of July. Now, the floor price for the offer is fixed at 119 rupees, which is a 12% discount from the current levels. So, Lisa, take us through this offer for sale and break down what this entire offer is going to look like.
Right. So the Finance Ministry, they have announced that they will be divesting the stake in RVNL, and as Sneh rightly pointed out, that it will they are looking to divest around 5.36% stake in RVNL, and the floor price has been set at 119 per share, which is at around 12% discount to the close price. And they'll be offloading around 11.7 crore shares, aggregating to around 1,330 crore. Now, the offer for sale that will be starting today, and it will be for non-retail investors, and the retail investors, they can participate tomorrow. Now, as of June quarter, it's pertinent to note that the government holds around 78% stake in RVNL. Now, this comes on the back of the divestment target that the government has aimed in 2023-24, and it is at around 51,000 crore. But looking at the recent buybacks, recent OIFs also, in June, on June 21st, we had Coal India, where the stake offloaded was around 3%, and the OFS amount came to around 4,185 crore. Even on March, Hindustan Aeronautics, when they came out with an OFS where the government sold around 3.5% stake for 2,867 crore. So, well, keeping in with the divestment target, the government is looking to sell around 5.36% stake in RVNL.
All right, Lisa, thank you so much for these details. And then we'll keep with the con calls, and we have Avenue Supermarts that also held an analyst call where the management addressed the concerns over pace of physical store expansion and slowdown in the GMA segment. My colleague Winnie is here with a note from Morgan Stanley on that. Take it away, Winnie.
Absolutely. Morgan Stanley now is maintaining an equal weight rating. They've given a target price of rupees 3,786 rupees. They are saying that they've sounded some more constructive on, the company sounded more constructive on DMart Ready in terms of business, and concerns on pace of physical store expansion and slowdown in the general merchandise and apparel segment were addressed as well. So let's talk about the key highlights that have come in even from the con call. One, what the company said that the general merchandise business is observing a good demand. Apparel is also seeing a bit of attraction, but lesser traction compared to general merchandise. The company sounded confident in terms of the e-commerce business now, as the business has limited headroom to lose money and DMart Ready is something that they are aiming at in terms of increasing the order frequency of the consumers over there as well. High ticket sizes and ensuring 100% delivery in 24 hours is what they are focusing on for DMart Ready. Now, obviously, in terms of the Pune operations have started, that in the first 2 years has seen a better growth than what they saw when they started in Mumbai. So, Pune operations surely is seeing a good traction versus what Mumbai had seen when they had started here as well. Now, they do not have any plans to venture into the quick commerce business is what they're saying. Store expansion is going to be a focus, especially in the smaller cities, that they will be seeing more store additions coming in going ahead as well. And they're confident of their pharmacy business given its past experiences of running the same as well. And deflation in the FMCG products is something that is likely to drag the SSSG growth in FY24. That's the key highlights that have come in from the con call as well.
All right, thanks Vinny for all those details. But let's keep it with management con calls then, because an overall in-line set of results have come in from Bajaj Finance for the quarter gone by. So let's take stock of the important commentary coming in from the management in their conference call, the company's guidance going forward, and what brokerages are also making of the performance. Vamakshi, take us through all those details then.
Well, yes, after reporting a strong performance in the first quarter, then definitely the performance of Bajaj Finance was in line with expectations. We have a guidance upgrade that has come in from Bajaj Finance. Now, keep in mind that FY24 AUM growth was expected at 28 to 29% earlier. The company has gone ahead and revised it to 29 to 31% for this year. The long-term AUM growth as well as the profit growth guidance have been maintained, but it is the GNPA as well as NNPA where they're expecting to see better asset quality. GNPA guidance has been revised to 1.2 to 1.4% from 1.4 to 1.7% earlier. Other than that, they've also gone ahead and raised their targets for the return on assets to 4.6 to 4.8%, while for ROE, they've done the same. ROE is expected over the long term at 21 to 23%. Now, the management in their con call highlighted that it was an excellent quarter for Bajaj Finance, and they believe that they are not far when we can see nearly 10 million new loans per quarter. They have also spoken about their cost of funds. They have risen over the past 3 quarters, and in fact a 15 to 17 basis point contraction was expected to play out in the first quarter, but what the company has actually witnessed is 11 basis points contraction. They're expecting gradual moderation in the NIMs as far as FY24 is concerned, but they're expecting to see a reversal coming in from FY25 onwards. Now, other than that, when we talk about their rural B2C business, the risk metrics are looking a little weak, and other than that, when you look at the operating metrics, OPEX has peaked out. They're expecting to see increasing investment in their digital ecosystem as well. So all in all, Bajaj Finance, the con call, is also highlighting some positive commentary from the management.
Well, all right then. We are completely out of time on this edition of Market Cafe. Snehi and I will take your leave. You don't go anywhere. The market will take the action forward. Thank you so much for tuning in.